PayPal stock hit an all-time high in 2021 when COVID peaked, but ever since it has dropped significantly in value, now trading at around $66 post Q1 2024 earnings release. Is the stock finally cheap? Does it present a GARP opportunity? In this video, we are going to analyze PayPal's business, dissect their Q1 release, analyze management's guidance for 2024, and dive into some key points from the earnings call. Towards the end, we will also go over PayPal's hypothetical valuation by understanding its moat and associated risks to determine where the business is heading from here. So, watch till the end. But before we get started, please don't forget to smash the like button and consider subscribing to my channel. If you are tuning in for the first time, I share key investing insights to help you become more financially literate and achieve your financial independence goals. You are watching Investing Strategy 101, and my name is Aditya Chen. Let's dive right in by first understanding the underlying business. PayPal is a leading digital payment processing platform with a vision to make sending money, selling, and shopping simple, personalized, and secure. Their business model revolves around facilitating secure and convenient digital payments, catering to both customers and businesses across the globe. PayPal has two-sided network at scale, the consumer side and the merchant side. On the consumer side, they cater customers with products that offer seamless peer-to-peer money transfer services, digital wallets, debit card, and credit card services. PayPal provides a secure and convenient way to send money, make purchases, and manage finances online. Whether you are splitting the bill with friends, shopping on your favorite e-commerce website, or sending funds internationally, PayPal simplifies transactions with just a few clicks. What's more, PayPal peer-to-peer payment platform like Venmo is a hit among younger generation for its social and user-friendly interface. PayPal also offers financial products for consumers known as Buy Now Pay Later, where customers can choose to make purchases and make the payments online over time. Now, on the merchant side, PayPal provides a suite of powerful tools tailored to businesses. One key product offering is Checkout, which allows merchants to integrate PayPal directly into their website to accept payments from customers, offering a seamless and trusted payment experience on e-commerce platforms and websites. Beyond PayPal's branded checkout solutions, they also provide unbranded options through their product called Braintree, empowering businesses to customize their payment flows while leveraging PayPal's security and reliability. In addition to this, PayPal provides additional services tailored to businesses, including invoicing, subscription billing, and POS solutions, which allows businesses of all sizes to manage their payments efficiently. But that's not all. PayPal also supports cryptocurrencies, allowing users to buy, hold, and sell select cryptocurrencies directly through their platform. Additionally, PayPal has introduced its own cryptocurrency called stablecoin. This expansion into crypto demonstrates PayPal's commitment to staying at forefront of fintech innovation. Overall, PayPal is an established trusted brand with around 430 million active customers and merchant accounts. PayPal operates in over 200 plus markets globally and supports transactions in multiple currencies. It allows businesses and individuals to engage in cross-border commerce, making it easier to buy and sell internationally. PayPal offers security and buyer protection using encryption and fraud detection technologies to safeguard user data and transactions. It offers buyers protection programs that help resolve disputes and protect consumers from unauthorized transactions. Overall, PayPal is a fintech empire spanning across these family of brands that they have acquired over the years. These companies work independently, yet their products are also integrated to offer an end-to-end platform for their merchants and consumers. Now let's dive into Q1 earnings release. PayPal delivered solid Q1 results, beating their own forecast with a better than expected top line, growing 10% year over year on constant currency basis. Their non-GAAP operating income increased by 15% year over year to $1.4 billion, which equates to an operating margin of 18.2%, which is also an increase by 0.84% year over year, driven by their expense discipline. The transaction margin dollars also increased by 4% to $3.5 billion. This was driven by higher interest earned on customer balances, PayPal branded checkout growth, and lower losses and Venmo growth. Their non-GAAP earning per share increased 27% to $1.08 from 85 cents in the same quarter last year. Note, now all of the non-GAAP numbers includes stock-based compensation expense and their associated payroll taxes as a change going forward. Their total active accounts stood at 427 million, which is a decline of 1% year over year basis. But this is important. On a sequential basis, the active account increased for the first time after several quarters by 0.4% or 2 million subscribers or active accounts. This is a huge number. This sequential growth, revising the trend of declining active accounts, highlights the management's ability to navigate challenges by improving engagement and retaining users. Additionally, the monthly active accounts also grew 2% year over year. Their total payment transaction increased 11% to 6.5 billion, and payment transactions per active accounts also increased by 13% on a trailing 12-month basis. All these underscores PayPal's position as a preferred choice for digital payments. Now, looking at their free cash flow statement, which is cash from operation minus capital expenditures, it has increased by 76% year over year to $1.8 billion. This free cash flow allows them to aggressively buy back shares and possibly pay dividends in future. To summarize, PayPal had a great Q1 quarter, with top line growing at 10% on a currency neutral basis. Their non-GAAP operating income increased by 15% and free cash flow increased by 76% on a year-over-year basis. Their gross margin stood at 39% and operating margin at 18%. Their total active accounts decreased by 1% year over year to 427 million, but increased sequentially by 0.4%, and their monthly active accounts also increased by 2% year over year. They repurchased $1.5 billion of the common stock during the quarter, and their total outstanding shares decreased by 5.4% on a year over year basis. From a balance sheet point of view, management had a net cash position of $6.7 billion. Now let's talk about forward guidance from the management. Management is expecting second quarter revenue to increase by 6.5% year over year. This was weaker than what the street was expecting. They are expecting the non-GAAP earnings per share to increase by low double-digit percentage for the second quarter. Note, this is diluted shares now because they have started to include their stock-based compensation. For the full year 2024, management raised its earnings per share guidance. Management is now expecting non-GAAP earnings per share to increase by mid to high single-digit percentage from year over year. Management is also expecting to generate approximately 5 billion in free cash flow and intends to purchase at least 5 billion shares. Now, let's look into some of the key takeaway from their earnings call. A key area of focus by this new management under Alex Chris is going to be driving small medium businesses customers and also driving their branded checkout volume, which have higher margin. I am convinced that Alex Chris and the team he has assembled can forge a new path forward and change the street's sentiment. Management is encouraged to see total active accounts inflect positively in the quarter and remains focused on driving deeper relationship and more activity across customer base. Transactions take rate declined 5 basis points to 1.74%, driven primarily by lower foreign exchange fees and lower gains from foreign currency hedges. Management expects transaction margin dollar to be slightly positive for the full year. They also expect non-transaction operating expenses to increase slightly. Their guidance includes minimal impact from the new innovations rolling out this year. Their focus is on execution as they begin moving from tests to pilot phases into launch. Management sees clear opportunities to lean in further. Now, before we talk about PayPal's valuation, it's important to understand its moat and risk the business has in the current market landscape. Most people think that investing is just about valuing businesses and their finances. But the real key is finding businesses that perform for decades to come. Valuation is important, but it comes after you have studied the moat of any business. A moat is understanding a business's competitive advantage. Now, coming to PayPal, Its moat is a combination of factors that give it some competitive advantage, which is due to its two-sided network with both consumers and merchants. It has a strong trusted brand that is recognized globally. By operating a two-sided marketplace connecting consumers and merchants, PayPal benefits from a positive feedback loop. As more users join the platform, it becomes more appealing to merchants and vice versa. This network effect creates a powerful barrier to entry for competitors. Moreover, PayPal's scale enhances its value prop for users, making it difficult for rivals to match its reach and convenience. The platform's established network also results in significant switching costs for both merchant and consumers. Merchants benefit from accessing PayPal's vast user base, while consumers appreciate the familiarity and security of the platform. Additionally, PayPal's brand recognition and reputation for trustworthiness strengthens its economic moat. Many users rely on PayPal due to its long lasting presence in the market and stringent security measures. These factors collectively make it challenging for competitors to replicate PayPal's success in the digital platform industry. Overall, I rate PayPal as a moderate mode due to some of the risks and challenges that it is facing from other fintech giants like Block, Stripe, and tech behemoths like Apple and Google that are eroding its market share. They are encroaching on PayPal's turf with innovative solutions and could affect its business trajectory. Some of its core services are replicable, leaving PayPal vulnerable to price wars and margin compression. If PayPal loses users, its high margin revenue source, that is branded checkout, could be impacted. Additionally, the uncertain macro situation due to the high interest rate environment can impact spending, affecting PayPal's transaction margin and profitability. Finally, operating in multiple jurisdictions means subject to various regulatory frameworks. Any changes in regulations related to data privacy, financial services, or cryptocurrencies could impact PayPal's operations and increase compliance costs. Overall, the future strength of the moat will depend on how PayPal navigates these challenges and continues to innovate. Now, let's look at the forward revenue and earnings estimate from the analysts. For the full year 2024, analysts are expecting PayPal to grow top line by 9.2% and 7 to 8% in the subsequent years. On the bottom line, analysts are expecting PayPal to grow by 35% year over year in 2024 and then mid single digit to low double digit in the subsequent years. Looking at these numbers, PayPal trades at 13.3 times 2024 earnings and 11.1 times 26 earnings, which is significantly lower when you compare it to Visa and MasterCard that are both trading above 20 times 2026 earnings. Now, let's talk about its hypothetical valuation. But before we go into that detail, I am not a financial advisor and this is not financial advice. Please do your own research before making any investment decisions. So, using my hypothetical valuation framework, let's analyze where PayPal stock goes from here. Of course, the stock can go way higher or lower from here depending on how they execute and market sentiment. So, looking at PayPal's past quarterly results and management's guidance, I have made some assumptions here to come up with a hypothetical price return with an investment period of 4 years. My low case assumes an annual revenue growth rate of 6%, operating margin of 16%, share repurchase of 4% with a PE multiple of 15. This leads me to a hypothetical annual rate of return of 5.6% based on current share price as of this recording. My base case assumes an annual revenue growth rate of 8%, operating margin of 18%, share repurchase of 4% with a PE multiple of 20. This leads me to a hypothetical annual return of 19.07%. My bull case assumes an annual revenue growth rate of 10%, operating margin of 20%, share repurchase of 4% with a PE multiple of 25. This leads me to a hypothetical annual rate of return of 31.66%. I personally think it should be somewhere in between base and bull case, as the company under the new management is focused on cutting costs and reigniting innovation at its core to bring enhanced value to its customers from the enterprise level to retail customers with their eye on the ball for profitable growth and not growth at any cost. As I look ahead, with the anticipated interest rate cuts by Federal Reserve in 2024, management's focus on growing its top and bottom line numbers while allocating billions to buyback on an ongoing basis should create a positive tailwind for the business. These factors should position the company for a potential new highs in the coming year. Overall, I believe PayPal presents an attractive entry point, as I believe the stock price is already factored in some of the risks and challenges I had outlined earlier. I anticipate Wall Street to come around those giving a higher multiple to its earnings if it continues to see the initiative from the new management paying off. Over the last week, a lot of analyst rating and price target for the stock has increased, and I expect this trend to continue as the year progresses. PayPal is my fourth largest position, and my plan is to continue to hold and buy more at current level. If you like this video, please give a thumbs up and subscribe to my channel, as it motivates me to make more videos and share my investing strategy.